You can build your DDA, Dirk, right into the position that you take. So we have a recent example in Boyle in UOA Pro. Boyle has been in a protracted downtrend for several months, and I'm reluctant to go against trends, right, just in general. But there are times, right, when you see the potential for a reversal. If the UOA shows up like it did pretty forcefully, right, then that may be one of those times, especially if the chart looks as though it will cooperate. And so we've got an idea in on that, but knowing, right, that it has a lot of false starts, it's tried to rally many times and failed. We selected a slightly in the money call that has a higher delta that would allow someone on any kind of reasonable pop, should Boyle deliver one, they could roll up into maybe the at the money at that point, and then they would be in a situation where there's really none of the initial capital at risk, right? They're basically playing for free. So that's what I built into that. I try to build those into positions where I think it sees fit, right? I see fit, just working within what you see, and it all, which goes back to my main point, which is the second point, is context. I think your DDA approach, just like everything else in the markets, has to be dynamic, and you have to adjust your DDA approach as the market itself unfolds, right? And you see what kind of behavior it's exhibiting. And so knowing, or I shouldn't say knowing, but expecting that there would be some serious test potentially of nearby support in the major index ETFs, and the fact that everything's become more defensive over the past few weeks. I mentioned in the weekend, or I should say over the weekend videos, that I would be going for singles. I mean, this is a singles market at this moment, and maybe you'll get an occasional double, but until we either start to see a real bounce off of this level or we break down below it convincingly, you could be in a volatile market that just gives you a chance to get singles, and that's it. And all I can say is, that turns out to have maybe been a good thing to share over the weekend. But I mean, when the Fed speakers come in, that'll potentially change things like that. But at least for now, it's hopefully helped some folks out. But the only reason I know that is because I've been through it enough times not to be dumb about it anymore, right? That's the only reason why I kind of know that you just learn from experience. Like, when they get near these things, this is often what happens. And so you try to share that. And as everyone on our panel knows, right, what do they typically do into the Fed? So when we get closer to the Fed, if it starts to exhibit the same type of behavior it typically does, then you trade it that way, right, until it stops working. Usually they've been, for some reason, right, they were rallying into Fed meetings. So if they start to get to that point where the market's due for a rally, Fed meetings looming, right, I'd probably be willing to go along with this. Again, it's the context. You've got to put everything in context in my book. Once you get better at that, you can, I think, handle things with a really deft touch. So we have a question about.
You got a question? Somebody's talking about, what do you mean by singles and doubles?
So singles and doubles are, catching like these modest pops, things that are not going to really be something you'll be bragging about. Like, oh, I rode that for 300%. You won't be saying that. You're probably saying, oh, I was able to eke out, 20 or 30%, maybe 40% on a short-term option. And I was happy to do it because the market reversed. That's the kind of mentality that I would bring to things until you, again, either start to see a really forceful bounce or we start losing support, and you can see that volatility is expanding, and there's a chance you could get some more like sort of capitulatory selling, things like that in the near term. And you have to adjust accordingly. And you still have to, one thing I would end my comments on would be the old quick trim. Again, I use a 10 lot as my assumption all the time, but if you can get into something with your typical 10 lot or whatever you like to trade and get one or two, maybe three of those contracts sold for a little profit, then you still hold the balance, or you still hold the majority of what you originally bought, but you don't have that pressure on you that this could instantly turn around on me and become a loser. You have a little bit of a buffer zone there that you've now been able to build up. And it lets you, I think psychologically, that lets you hang on to the balance a little more easily. And that even if it gets back to unchanged from where you got in at the trigger level, and we're big on just getting out if the market's rolling over and the trigger level's looking like it's not going to hold, just get out on the remaining 7, and you probably still eked out a profit, and you keep a positive psychology. These are things that I think are important. But there's a lot, there's a lot that goes into position management, and I think it's the DDA, I think just being disciplined gets you further than not having a plan, right? So you want to regret selling a little too early here and there. You want to regret that you could have maybe eked out a little bit more, because as Bill points out a lot, right, we're trying to get the middle 80%, not the 0 to 100% on the trade. You're trying to get the easier money and not expose yourself to fighting against a position that was working better, and now you're regretting it. You're trying to hold on for more, and probably you shouldn't be doing that. I treat it as, remember, you can always get back in, you can always get out. And I would treat it as, I'd rather have a series of a couple trades than one trade that, put me through the ringer, and I feel like I need a vacation after it's over.
All right, before we go on, I just want to share this quickly. If you are interested in real active trading, talking about singles and doubles and ultimate discipline trading, the Rebel Pit is your place. But you should be an experienced trader, or you should have some basic understanding of options. But this community will teach you, not only from a perspective of our editors, from Ryan, Wayne, and Greg, but the community itself. And the ideas which are put up there at the moment, here's just some examples. Obviously, not all of them will trigger, but when they trigger, they require the ultimate discipline.